Well, dear students, good morning to you all. Today our topic is introduction to costing. Costing. In the early years of 20th century, the cost accounting has emerged as a specialized discipline, and the need and the importance of costing came into existence because of these following reasons. Understand? Because of these reasons only, cost accountancy came into existence. The limitations of financial accounting, improved cost consciousness, rapid industrial development, especially after the Second World War, growing competition in the global market, importance and improvement of quality of product, cost control and controlling the rising prices. Because of these reasons only, the cost accounting came into existence. Well, dear students, first I am going through the limitations of financial accountancy. You know, accounting is of three branches. Financial accountancy, cost accountancy, and management accountancy. Not only these three, some other branches are also recently developed. Social responsible accounting, human resource accounting, inflation accounting, and so on. Now, generally the word accounting refers to financial accounting only. The word accounting refers to financial accounting. What we know accountancy, that only financial accountancy. Recording of business transactions in the journal, posting into the ledger accounts, balancing of accounts, preparing a trial balance from the balances carried from ledger accounts, and then preparing final accounts, trading profit and loss account and balance sheet, and communication of the accounting information to the accounting users or who are the interested parties for that particular information, like owners, management, customers and suppliers, and so on. That is all called accountancy, financial accountancy. Recording of business transactions in a systematic and scientific manner so as to get the results, that is called financial accounting. Recording, classifying, summarizing of business transactions. That all you know financial accountancy. Because of limitations of financial accountancy, only cost accountancy came into existence. Understanding or not? The financial accounting is not in a position to satisfy all the parties who are involved in accountancy, who are interested in accountancy. So, first I am going through what are the limitations of financial accounting. The financial accounting system is a historical system. What it means? Historical system means what happened that only recorded. In accountancy, financial accountancy, what happened, what all the transactions happened, they are recorded. What will be happening in the next moment or tomorrow or in the coming period, we don't know. There is no planning, there is no forecasting, there is no estimating, there is no decision making, there is no budgeting and so on. What happened that only recorded. That's why accounting, financial accounting is a system of historical system. Now, the financial accountancy at the end of the year gives you final profit as the whole of the organization. It gives you final profit, final net profit as the whole of the organization. It may not give net profit per unit wise, section wise, branch wise, batch wise, process wise, contract wise and so on. It gives net profit as the whole of the organization. Understanding or not? Well, dear students, once again, accounting system is a historical system. What happened that only recorded. What will be happening, we don't know. No planning, no budgeting, no forecasting, no estimating. Understanding? Next, accounting gives you net profit as the whole of the organization. It may not give net profit per unit wise. As far as our academy is concerned, it may not give net profit per student wise or batch wise, class wise, and so on. Next, the financial accounting takes only the quantitative information. It may not consider the qualitative information. Understanding? What all you can measure in terms of money, they are only recorded in accountancy. We are not taking into the consideration like efficiency of the labor, efficiency of the management, operating capacity, whether the workers are working according to their capacity or not. These are all not taken into consideration. Just we are taking the quantitative information. Understand? The financial accountancy is helpful only to the owners of the organization to know the profit and to share the profits. Understanding? To know the profit and to share the profits, the financial accounting is helpful to the owners. It is not useful to the management to take decisions. And it may not be useful to the bankers who are going to sanction a loan to our organization. Understanding? It is mainly useful to the owners of the organization. Next, well, dear students, in the cost of product, the most important elements and components are material cost, labor cost, and expenditure cost. These three are the most important. There is no cost control in financial accounting. Whatever the material you purchased, that only recorded. Or whatever you sold, whatever you issued to the other departments, that only recorded. There is no day-to-day valuation and verification of the stock. How much stock is damaged, whether it is normal or abnormal. These are all not taken into account. Just the stock is valued as particularly at the end of the year as a closing stock. So there is no proper control on material, which is the most important element in the cost of product. Next, labor cost. Whatever we paid wages or salaries, that is recorded. Whether we paid according to their work or not, we don't know. Whether the workers are working to their capacity, efficiency. Actually, a labor is there, a laborer, a worker is there who can produce 100 units in 1 hour, but he is producing only 80 units or 70 units. Why? We don't know. Just whatever we paid, that is recorded. There is no proper control on labor. And you know expenses, but in the costing they are called as overheads. There is no classification of expenses in financial accountancy. So many expenses are there: rent, lighting, power charges, depreciation, and so many expenses are there. Some of them are normal, some of them are abnormal. Some of them are fixed and some are variable. Some are avoidable and some are unavoidable. Some are controllable and some are uncontrollable. Understanding or not? We don't know such a classification of expenses in financial accountancy. We don't know what it is, sir. If it is a fixed expenditure or variable expenditure, if you know the fixed expenditure cannot be controlled, we have to pay compulsorily, irrespective of the production. But variable cost increases or decreases based on the production. So we must know the difference between the fixed and variable. Some are normal and some are abnormal. Normal cost we cannot avoid. Abnormal cost, abnormal losses, they can be controlled through proper verification or proper taking into consideration. We can control. So this type of control on material and labor and expenses is not there in financial accountancy. Understanding or not? The financial accountancy is based on certain assumptions. Some concepts and conventions are also there in financial accountancy. Take an example. According to the convention of conservatism, the future expected losses are taken into account, but future expected profits are not taken into account. Understand me? Future expected losses like tax provision, bad debts provision, and they are also estimated, not exact, we don't know. In the same way, cost concept is there. Suppose we purchased a machinery for 1 lakh. At the end of the year, after 10% depreciation, 10,000 we reduced and we showed in the balance sheet as 90,000. But can it be sold in the market for 90,000 or not? We don't know. The market value may be more or less. That means we are not in a position to find out the real profit as well as the real financial position. Understanding? Next. The accountancy is not in a position to give answers to the certain questions like then compared to last year, this year sales are rapidly increased, heavily increased, but the profit not so much increased. Why? We don't know. There may be so many reasons the cost of production is increased or the volume of sales decreased. So the profits may be decreased because of so many reasons, but they are not taken into account in accountancy. Next, suppose the labor is replaced by a machinery, what will be the effect on cost of production and what will be the effect on total volume of sales? If the sale price, if the price of the commodity or the product, if it is increased by 10 paisa or decreased by 10 paisa, what will be the effect on sales? We don't know. All these questions cannot be answered through financial accountancy. Understanding or not, the financial accountancy is helpful to the owners. It gives mainly the final net profit as the whole of the organization. Only quantitative information is taken into account, qualitative information not taken. It is a historical system. It is based on certain assumptions like concepts or conventions of accountancy. So many drawbacks or limitations are there in financial accountancy which led to the importance of the costing, for the importance as well as the existence of costing because of limitations of financial accountancy only. Understanding or not? Dear students, I have already explained the limitations of financial accountancy. Now, I am going through the other factors and the reasons which are influenced and forced for the birth and growth of cost accounting. What are they? Cost consciousness, cost effectiveness, quality consciousness or importance of quality of product, competition in the global market. Understand, these are also playing an important role which influence and force for the cost accounting. The importance of cost accounting is increased and developed because of these other reasons. Now, every manufacturing unit, the main motto is to produce the goods and services at low cost but at a high quality. We want to produce at low price, but we have to increase the quality. Well, yes, students, once we have to increase the quality means automatically we have to pay more cost. Once cost is increasing, automatically the price also increasing. When the prices are increasing, automatically demand decreases. That is what we call law of demand theory in economics. Understanding, we want to maintain more quality. Why? Because to face the competition in the market. But we have to sell at low price. How it is possible? We are maintaining more quality means we have to pay more cost, automatically prices are increased, then automatically demand decreases. Our total sales will be decreased. We will be in the losses. Sir, we don't want to reduce we don't want to increase the price. Though the cost of production is increasing, we want to reduce the prices to face the competition. Once you reduce the prices, means you are not in a position to reach your cost of production, you are not in a position to recover cost, automatically again we will be in the losses. Understanding two situations? When prices will rise, demand decreases, total sales decreases, automatically we will be in the losses. Suppose the price not increased, then we are unable to reach our cost of production. We cannot recover our cost, automatically again we will be in the losses. In the early age or early stages, if we are in the losses, we can't survive, we can't stand, and we can't settle in the market. Understanding? So what we have to do? We have to coincide the both. Quality cannot be compromised and prices cannot be increased. We have to minimize the cost, we have to reduce the cost. How it is possible? Look at the both sincerely. Suppose right now my total cost of production is ₹1,00,000. At that time I am producing, my total output is 10,000 units. 1,00,000 total cost divided by 10,000 units, that is equal to cost per unit is 10 rupees. Well, dear students, here our cost of production is 1,00,000 divided by output is equal to 10,000 units, that is equal to cost per unit 10 rupees. Well, dear students, so as to maintain the quality, I don't bother about the cost of production. Though it is increased, I don't have a problem. Right now, my cost of production is increased to 1,20,000. But by efficient and effective utilization of our resources, men and material, money and machinery, understanding, by proper utilization of our resources, by effective control, we produce more output. Suppose we produce 15,000 units. Then our cost per unit is only 8 rupees. Understanding or not? So, cost per unit only important than the total cost of production. So, we have to increase the output. We have to utilize the labor, material, men, machinery, all we have to utilize properly. Then automatically we can increase the output. Once the output is increased, the cost per unit is decreased because fixed cost is once for all fixed per annum. Understanding? So, cost per unit is reduced, automatically we will get more profit, and we can look here, cost plus profit, that is equal to sale price. Once our cost is less, automatically we can charge less price in the market to our product, automatically our sales can be increased. This is the theory we have to follow. In such a way we have to control the cost and we can face the competition in the market. Well, dear students, based on the situations and conditions, we have to change our policies and strategies. We have to change our methods and techniques. In such a way, we have to go through the production. We have to go through to the production. Well, dear students, proper planning and control both are important. This is only called management. That's why the importance of cost and management is increased in the industrial world, and cost accounting and management accounting, both they are also developed as separate specialized sciences in the industrial world. Understanding? Thank you all for watching our video. And in the next class, we will go through what is cost, costing, cost accounting and cost accountancy, and what are the advantages and so on. Well, Once again, thank you all for watching.